G'day YouTube, it's Tim here, just about to go do a live broadcast regarding the week in real estate. So I'm just waiting for my other stream to fire up and then we'll kick straight into it. This week on The Wire, positive property shock predicted, APRA move to lift lending, and NAB Tips RBA to cut twice. G'day guys, my name's Tim Guest, Australia's leading financial educator and managing director of Infinite Wealth. I've trained over 18,000 people how to reach their financial goals, whether they be home ownership, travel and lifestyle, or early retirement, using only what they where we cover off all the top stories happening from the week in real estate, finance, property, those kinds of things, guys. So welcome to the live broadcast. Now, of course, if you're first time tuning in, make sure you click subscribe or follow so that you see all our videos coming forward. If you're a long time follower, welcome back. We'd love to see you guys. If you've got a question for our Just Ask Tim video series, make sure you pop it in the comment box below and I could be answering your question live through one of our broadcasts. If not, one of our team will definitely get back to you. But guys, that's about it. So let's get into the top stories. A big week in real estate over the last 7 days. Some major developments. So let me run through the top three. Property shock predicted. So expect a rebound in Australia's property markets. That's the view from economists in the industry following Labor's failure to win an election and implement changes with regards to negative gearing. So as an example, Goldman Sachs economists are forecasting a moderate positive shock to sentiment in the corporate sector. Markets in Sydney and Melbourne are expected to bottom out earlier than what was originally expected, and it's providing a good boost to particularly the Brisbane and Perth markets as well. CoreLogic's Tim Lawless says the election outcome is an overall net positive as well for housing. Certainty has been reintroduced, which will bring confidence and allow people to make essentially, as we've got strong household wealth there, and reduce risks in the housing market. This could lift the household. So property leaders have flagged restored confidence. That comes from Ray White. Chairman Brian White has also called the bottom of the market in the wake of the coalition's election victory as well. Tyron Hyde, the director of depreciation experts at Washington Brown, he says he expects to see a flurry of activity from people getting into the market in the coming months. Now that negative gearing is abolished, he says the defeat of Labor and its policies will mean the current negative gearing provisions will remain in place for a long time. Two elections that take that off the table for a long time now. He even, getting back to Tyron Hyde, actually thinks that he won't see those kind of changes proposed again in his lifetime. On top of that, mortgage broker Louise Lucas, and that's at the property education company, says it's now full steam ahead for property investors who are worried about the prospect of a Labor victory and changes to negative in the market. I said probably the way that we're going to see this play out, I think Melbourne pretty much will have bottomed already, or almost instantly from this news. Sydney might still have a little bit of time to go, but very close to the bottom now. Perth, we're very clear, is in a recovery now. Looking at stats from 12 months ago, 40% of Brisbane has kind of been in its recovery, but really struggling to kind of uptick. And of course, a lot of that had to do with obviously the APRA restrictions and also negative gearing capital gains tax policies that Labor cleared the decks. Get ready, because it's going to be an exciting time in property right now. Moving on, and another lending. So APRA has begun moves to ease the restrictions on how lenders assess mortgage applications, with likely positive consequences for residential real estate. Essentially, under the current Australian Prudential Regulatory Authority, under their current rules, lenders have to assess a borrower's ability to service loans, assuming an interest rate of above 7%. So most lenders often do 7.25, if not 7.4 or under. So significant difference there, and it's been heavily criticised. Now APRA says it will remove its guidance. Instead, lenders will be permitted to set their own minimum interest rate floor for use in serviceability, but it has proposed that it use a buffer of the Louise Lucas says the changes will mean borrowers are assessed on interest rate levels close to the ones they're actually paying. Riskwise Property Research says APRA's scrapping of the 7% stress test buffer will effectively see a 9% increase in borrowing capacities for owner-occupiers, which will rise to between 13 and 14% if the RBA quite heavily predicted now. So major change when it comes to lending there. It's going to have significant impact on people's ability to borrow money. So once again, more great news. And then coming out of the RBA this week as well. So a big week, like I said, you know, APRA, the election, and now the RBA. The Reserve Bank of Australia appears poised to slice the agenda next month. Now, in a speech to the Queensland branch of the Economic Society of Australia in Brisbane, Lowe said without a cut in interest rates, it was unlikely the bank's forecast for lower unemployment and a lift in inflation would be met. Declaring that Australia could do better than have an unemployment rate at around 5%. He said there were few options for the RBA but to consider a rate cut. NAB has brought forward forecasts, which is next month, particularly after the governor's comments this week. It seems like the rate cut is on the cards for next month. And they're predicting another rate cut in August as well. That's NAB. With a third 25% basis point movement to below 1% possible in early 2020. I think that's a bit... biggest lender says an unexpected uptick in the jobless rate provided further evidence that the economy has softened more than the RBA expected, hence why they're looking at the rate cut. And the nation's, and coupled with weak inflation for the March quarter, as well as subdued businesses and consumer sentiment, NAB says April's job figures would force the central bank to take action. That's Tuesday, first Tuesday in June. Expect the news to see a rate cut. But guys, that covers off the three biggest stories coming from real estate this week. Like I said, guys, if you're first time tuning in, make sure you subscribe or follow depending on what platform you're watching this on. Of course, we'd love to see all your comments and questions. Like, love, angry. Let us know what sense the markets are. And of course, please share these posts with your friends and family so they get the benefit of this valuable information. Apart from that, guys, I'll be checking in early next week with the Just Ask Tim video series. So if you've got any questions, please send them through. And have a great weekend. I look forward to speaking to you then. Thanks a lot, guys. See you later.